So, welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the Euro USD for our chart. All charts to be presented are to be of the same time frame. Mind you that today we will be mixing fundamentals with technicals. Starting with Euro USD, it was quite disappointment on Friday when we saw the release of the preliminary PMI figures for the Eurozone, especially about the manufacturing sector, and I would be highlighting here Germany's manufacturing sector. It was more or less, let me widen this a little bit, one of the factors which may have contributed to the weakening of the Euro side. And at this point, it would be interesting to note that the Euro weakened substantially against the US dollar. But that was practically mostly on both sides of the aisle. On the left-hand side, we had a weakening of the euro as the preliminary manufacturing PMI of Germany remained, or if you prefer, continued to signal a contraction of economic activity. And that's for the 12th month in a row. And the German manufacturing sector in the Eurozone is the spearhead of the exporting industry. And more or less that tended to exactly highlight the possibility of a recession hitting the Eurozone, if not a considerable slowdown. More or less as a result of ECB's monetary policy tightening. I would be highlighting here also that over the weekend we saw the mutiny of the Wagner Group, a mutiny which is more related to Russia, but the war in the southern east flank of the Eurozone is important for the zone. So the mutiny as such proved to be short-lived. Interestingly enough, there was a negative effect on the ruble. It's characteristic that the ruble against the US dollar, if I'm correct, dropped to a 50-month high. Or if you prefer, the ruble was at the low point, 50-month low against the US dollar. And that should be USD RUB at 50-month high. So that was one effect, but other than that, the wider market did not seem to be affected. And it seems that the stakes at the mutiny as such were not as high to actually move the market. It's not like, say, for example, the Wagner Group got hold of nuclear weapons or something like that. No, it was something which was considered to be more internal, but it will have an effect on the outcome, or if you prefer, on the development of the war in Ukraine, which is rather crucial in our opinion. Other than that, let's move on a technical level here. Interestingly enough, here we go. We readjusted the upward trend line, and it's interesting that the upward trend line was broken exactly on Friday, which highlights the interruption of the upward movement of the pair. Interestingly enough, it bounced beautifully on the S1 1.0845 support line. And that actually seems to be interrupting a possible bearish tendency, and we would be more inclined into adopting a bias for the continuation of the sideways motion, most probably between the 1.0910 and the 1.0845. Note also the RSI indicator, which continues to run below but along the reading of 50, implying, I wouldn't say a rather indecisive market, yet there's still some slight bearish tendencies left in the market sentiment. So keep your watch there. For the time being, though, we tend to maintain the view that the price action is to remain between the R1 1.0910 and the S1 1.0845 in a sideways motion like this. Should the bears clearly take over, I would expect the price action to drop, break the 1.0845, and start aiming for the 1.0785. Definitely for a bearish outlook, the breaking of the 1.0845 is required. Why? Because we would require a lower low than this one. Now, the boys at research have mentioned the possibility of a downward trend line going on like this. In my opinion, it's a little bit too early. I would like to see a second continuous lower true. Only one is not enough, in my opinion, for an active downward trend line. But it's going to be interesting. In any case, should the bulls take over, which would be a rather surprise, but it's possible, especially given the correction higher after bouncing on the S1 1.0845, we may see the price action breaking above the 1.0910 and start aiming for the R2 1.0965. Definitely a higher peak than this one would be required for bullish outlook, nothing less. So the pair has to break the R1 1.0910 in order for us to call in the bulls. It's a very, very interesting pair. And in my opinion, it could go either way depending on the fundamentals and the outlook. By the way, have you noticed the release of Germany's IFO indicators? They were for June. They were lower than expected, both in current conditions as well as on expectations. And in my opinion, that tends to highlight once again a wider degree of pessimism on behalf of the market about Germany's economic outlook. Yet at the same time, there seems to be a deterioration of the conditions on the ground for the German economy. So it's not only like the outlook is worsening, but also the actual conditions right now are not that good, are deteriorating. And I didn't see if that had any specific market reaction, but it would be interesting to have a look at it. Should be somewhere here. Yeah, this is it. You can see how the euro dropped against the US dollar at the release at around 20 pips. Sorry, 15 pips, my bad. So it was a very, very characteristic move on behalf of the market as it had dropped 1, 2, 3, 4, 5, 6 continuous minutes, a brief correction, and then again 1, 2, 3 lower and stabilized somewhat. That's on the minute chart. Back to the 4-hour chart. Once again, we highlight the possibility of a sideways motion. At the same time, I would be noting that there seems to be a wide uncertainty in the markets about a possible economic slowdown in the US or even a recession due to the Fed's monetary policy tightening, at least due to the Fed's hawkishness. It's a big issue. Traders have to navigate between the possibility of recession on the one hand and, it's not as if USD traders are worried only about the US. As a global reserve currency, it's understandable that there could be effects also on a global economic level, with the possibility of a slowdown increasing. And these elements come all over the place. We can see that in China's manufacturing economic activity. By the way, we're getting the NBS indicator for June on Friday. You can see that in the preliminary PMI figures, which we saw on Friday, especially about the manufacturing sector. The services sector is still holding on despite suffering a setback, a slowdown, but there's no contraction yet. On the other hand, the industrial sector is contracting continuously. So these market worries about a possible economic, I wouldn't say recession, but still a substantial slowdown, could create safe haven inflows for the greenback, and that could strengthen it. So practically what we saw on Friday's afternoon, which was a wide drop, more or less was a result of these three factors. The results of Eurozone's preliminary HICP rates, worse for a possible global economic slowdown, which tended to feed the US dollar, as well as the Fed's hawkishness tended to feed the US dollar. Let's have a look at GBP USD. Okay, we have some adjustments to make here before we move on. Interesting level here. We have to widen a little bit. Let's zoom in a little bit, adjust it. Let me correct the labels as well. Let's start fresh, at least on the resistance line. There are one at 1.3135. There are two at 1.2990. Let's set the R3 node exactly this level here as it was tested at 1.2830. Now the first support line, in my opinion, is being set here. It's a very interesting level. Somebody could be setting it here. I am going a little bit further lower. And that would be the 1.2630. It's interesting. The market worries about a recession in the UK economy are intense, and practically they were intensified further by the interest rate decision of BOE last Thursday, where the bank proceeded with a double rate hike, more or less highlighting its hawkish intentions. And in my opinion, that's a signal that we may be seeing or be about to see a possible economic recession in the UK economy. Give me a sec. 1.2485. And another one set on this low point here. I know they're pretty wide, but in my opinion, there's clear room for such movements. 1.2310. There you go. Now let's see what's happening here on a technical level. We've set our charts. We saw how low, how high it could go. Of course, there are never any guarantees here. There was a nice downward motion which seems about to be interrupted. Let me show it to you. Here it is. And it's interesting how the price action is now about to break the downward trend line, implying an interruption of the downward movement. Interestingly enough, we'll be noting also the RSI indicator, which is running along the reading of 50. Actually, right now, it's slightly above it. It's at 52, 53. Yet overall, that seems to be the case that markets are still rather undecisive about the direction of cable. That may exactly allow the sideways motion to be maintained. The price action is exactly on the 20 moving average, which is the median of the Bollinger Bands, another indication of an undecisive market. It's not at any of the two extremes, and it's characteristic how the Bollinger Bands have narrowed, implying low volatility. So that tends to highlight the possibility of the sideways motion being maintained. At least that would be between the 1.2830 and the 1.2630. We're talking about 200 pips distance, but in my opinion, given the lack of volatility over the past European session, but also previous sessions, we can see how little there was an effect on Friday's afternoon or during today's early European session. So we expect the sideways motion to be maintained here. For a bullish outlook, I would require a higher peak than this one or this one. So practically, the price action has to break above the R1 1.2830 and start aiming for the 1.2990. On the other hand, should the bears take over, we may see the price action dropping, breaking the S1 1.2630 and start aiming for the S2 1.2485, which provided support here beautifully. While the 1.2630 was mostly, okay, there was some support here, but it was mostly resistance line. Okay, let's have a look at USD JPY. Let me clear the chart first. That's better. Let's zoom in a little bit. That's even better. There was a nice upward movement. Actually, that upward movement is still being maintained. And let me show you how. Have to shift the upward trend line a little bit to the right. You can see that there's still upward movement tendencies here. As the price action has not broken below the upward trend line. Okay, definitely this has to be turned into support line. Let's go hunting for a new ultimate resistance line. Unlocking the chart, going back, even further. Here we go. Have a nice level here. I think an even better level here. Have here, and here. Could go a little bit higher. Yep, on the peak. I'm narrowing it. To this level. and that would be the in red. $147.30. Lock it in. Let's correct the labels as well. Readjusting the chart. On a fundamental level, it's interesting how Japanese government has been escalating its rhetoric about a possible market intervention in order to support Japanese yen, as it considers the current moves to be a little bit abnormal, which is rather understandable. Yet, I would be highlighting that we may be still off before JPY bottoms out. But let's have a look at that. Track the chart, the labels. There you go. Plugging everything in. For the time being, we tend to maintain a bullish outlook for the pair as long as the upward trend line remains intact. But note how the RSI indicator has been dropping. It has dropped clearly below the reading of 50. And it's actually now aiming for the reading of 50. Now, for an interruption of the upward movement would be signaled should the upward trend line be broken. And the price action remains between the 143.85 and the 142.10. On the flip side, should the bulls take over, we may see the price action rising, breaking the 143.85 and start aiming for the 145.70. We would require a higher peak than this one in order for the bullish outlook to be maintained. Anything lower than the 143.85 and above the S1 142.10 is a stabilization in sideways movement in our opinion. For a bearish outlook, we would require the pair to drop, break the pre-mentioned upward trend line, but despite the breaking of the upward trend line exactly signaling the interruption of the upward trend, we would require also a breaking of the 142.10 support line, a clear break, and the pair to start aiming for the 140.75 before calling in the bears. Interestingly enough, I would like to see what the high point was of USD/JPY, and we're moving now to the weekly chart. It's not exactly low, is it? It has seen lower periods back here. That was in 2020. Note how the pair rose given the weakening of JPY all the way up until October 2022 last year. It corrected, but there are still bullish tendencies. And I would be highlighting that the bullish tendencies seem to be a result of JPY's weakening, which in turn is practically a result of BOJ's dovish stance. The hopes which were created with the release of Mr. Kuroda and Mr. Ueda taking over seem to have been disproven. And that's something which continues to weaken the JPY. Of course, carry trade helps with that. Okay, let's have a look at USD CHF. So readjust the chart, the labels a little bit. So, what's the story? There seems to be a clear-cut sideways motion, and that's being the case between the R1 0.9020 and the 0.8905 support line. It's interesting how the S1 has provided support a number of times. And the pair actually aimed for the R1 0.9020. That was on Friday. For the time being, we once again maintain a sideways motion bias between the R1 and the S1. Should the bulls take over, I would expect the price action to break above the 0.9010 and start aiming for 0.9115. Despite that seemingly being wide, in my opinion, it's quite doable within 24 hours by the pair. On the flip side, should the bears take over, we may see the price action of USD CHF dropping below the S1 0.8905 and start aiming for 0.8820. We have to note here that we had SMB's interest rate decision last Thursday. The decision as such, and it would be interesting to see the market reaction on that decision. This is the 1 minute chart. Let's widen this a little bit. Let's go back. Twenty-third. '22nd. The price action was more or less as expected. There were little surprises there. The main reason why, here it is. The main reason why there was a nice upward movement, but still nothing out of the ordinary, was that the bank has more or less delivered what was it expected to deliver. 25 basis points rate hike was expected. That was actually the case, and I would say that it may have even disappointed the markets a little bit. At the time of the release, CHF-OIS was showing a split market with the expectations for a 25 basis points rate hike being almost equal, a little bit higher than the market expectations for a 50 basis points rate hike. So there may have been some disappointment among Swiss traders there. Other than that, I think that the pair was mostly USD driven. Let's have a look at the Aussie. The Aussie, which has been dropping and actually still is. It's interesting how it has broken the 0.67. Okay, we have to make some readjustments here. Definitely this one goes a little bit higher. This remains unchanged. There seems to be a support line here. There's another support line down the road, and the third one even lower. Let's have a look at the resistance lines. The R1 is clear, the R2 is clear. I would like to see the R3. Could be a little bit lower. Let's start correcting the labels as well. Nothing much here. We move into the 0.7040 down 10 pips, so that goes to 0.7030. This level here is at 0.69. The R1 now is being placed at 0.68, 100 pips lower. Now there has been lots and lots and lots of commotion about RBA governor Lowe, especially in the local Australian press. There was extensive criticism about the bank hiking rates the way they did. 0.6660 is one. In my opinion, though, I don't think that the Australian government has much of a choice here. Even, give me a sec. Even Deputy Governor Michelle Bullock, practically highlighted that rate hikes are the only way out of the inflationary pressures tormenting the Australian economy. So I wouldn't expect much of a change, even should the RBA governor be switched to Michelle Bullock. Which is practically understandable. On the other hand, though, we have to note that ordinary people are suffering there, as in most countries where we have practically rate hikes as a medicine for inflation. It's hard, and especially mortgages and low income. So for the time being, we tend to maintain our bearish outlook for the Aussie, despite the stabilization at the S1 0.6660. Please note that the RSI indicator below our forward chart is at the reading of 30, implying that there's still a pretty bearish sentiment on behalf of the pair for the Aussie. Definitely the fact that the Aussie is considered mostly a commodity currency, which is also linked to copper, which in turn is linked to industrial activity, as it is also linked to iron ore, does not exactly provide some support for the Aussie. On the contrary, it provides headwinds. So on a fundamental level, I don't see any specific reason why the Aussie should gain unless either the monetary policy changes towards a more hawkish side, which may be very difficult given the political criticism provided, or even a comeback of China, also quite difficult. If the Chinese haven't made a clear-cut comeback over the past 3 months, it may prove difficult in the next. Another possible support reason for AUD on a fundamental level would be an improvement of the market sentiment. And mind you, that could have an adverse effect on the US dollar. So that would practically provide exponential support for AUD/USD. But once again, given the hawkish intentions of central banks, does not seem to be the case for now, at least. For the time being, we expect the price action to break the S1 0.6660 and start aiming for the S2 0.6575. A possibility of a sideways motion is there, but it may take 48 hours. In that case, we expect the price action to remain just above the S1 0.6660 or to rotate around it. The first key signal, in my opinion, signaling exactly the stabilization of the pair would be the breaking of the downward trend line, showing that the downward movement was interrupted. On the other hand, for a bullish outlook, the situation becomes far more complicated and more difficult. It's something which may take a while. And in that case, though, we would expect the price action to rise, break the downward trend line, but also I would require a higher peak than this one. So the price action has to break above the R1 0.68. Let's move now to use the CAD. The wildfires in Canada are raging, and it's a sad, sad sight. And it could weigh on the Canadian dollar as well. So allow me to reformat this. This also holds. The R1 remains unchanged. The R2 remains unchanged, and we change the R3 at 1.3385. Okay. The levels are set. The direction, I think, is clear. We have a downward movement which seems to have been interrupted. One could argue from over here. So we switch our bearish outlook in favor of a sideways motion initially, possibly between the S1 1.33, 31.35, which provides support here, and aim for here. On the upper hand, I would be noting the R1 1.3230. So practically we expect the sideways motion to remain between these two boundaries, at least for the time being. Should the bears regain control, I would expect the price action to drop, break the 1.3135. I wouldn't be surprised to see in a clear-cut bearish outlook the price action of USD CAD edging below the S2 even, the 1.3065. On the other hand, should the bulls take over, we may see the price action of USD CAD breaking above the R1 1.3230 and start aiming for the 1.3315. On a fundamental level, I would be also highlighting BOC's CPI rates and this week, and I would be also highlighting especially oil prices. There was a considerable drop last week. It's going to be interesting if that drop is going to be extended, and if actually so, that could weaken the Canadian dollar, given that the Canadian economy is a strongly oil exporting economy. Okay, let's have a look now at, as we were talking about oil, let's have a look at oil, WTI to be more exact. Let's zoom this in. We haven't seen this instrument for a while now. And it's actually a shame. We should give it more notice. Okay. Okay. Definitely this has to be turned into a resistance line. Could go a little bit higher. As could this. I'm targeting not this peak, but this peak. It's far more clear, in my opinion. Anyway, let's find a new ultimate support line. Somewhere here. 66.45. Locking everything in. Come on. Let's readjust the chart. Let's see what we've got as a resistance line. That would be the 74.65. As there are two, I'm setting the 72.70. And as there are one, my bad, sorry. $71. Moving now to support lines. First support line being placed at 69.40. Second support line here. $67.55. Sorry, that should be a mistake. Let's have a look at that level again. Yep, this should be 69.40. My mistake, sorry. And this should be 67.55. Finally, there's three being placed way down low. 65.45. So the big question here is what to expect from the commodities price. I would expect stabilization for the time being, yet there's still some bearish tendencies left in the market for the commodity, which would be of interest. Should the bulls take over, we may see the price action rising, breaking above the R171. On the other hand, should the bears take over, I would expect the price action to drop, break the S1 69.40, and test, if not even breach, the S2 0.6755. For a possible sideways motion, we may see the price action revolving around or just above the S1 69.40. The RSI indicator seems to have stabilized, yet remains below the reading of 50. So on the one hand, that may allow for some slight bearish tendencies for the commodities price. So for the time being, we tend to maintain a bias for the sideways motion to continue, yet I highlight the possibility of some bearish tendencies here. Let's have a look at gold's price. Let's readjust the chart. Seems correct. I think that overall gold is going to maintain its negative correlation with the US dollar. For the time being, though, we tend to maintain a bias for the sideways motion to continue between the 1935 and the S1 1910. Note how both levels provided support and resistance in the past. Should the bulls take over, or if you prefer for a bullish outlook, I would require clear break of the 1935 and the price action to start aiming for the 1955. Definitely would require a higher peak than this one or this one. So the R1 now becomes critical in my opinion. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Everyone, my name is Emily. Today we will look at what influences the price movements of major currency pairs. Currency pairs are influenced by geopolitical events, central banks' interest rate decisions, and macroeconomic data. For example, the Federal Reserve, the central bank of the US, maintains financial stability by increasing or decreasing the discount rate. The Fed sets target interest rates at which banks lend to each other overnight, but it also sets the discount rate, the interest rate at which banks can borrow from the central bank. If the Fed raises interest rates, it increases the cost of borrowing to slow down the economy. On the contrary, in order to stimulate the economy, the Fed lowers rates, making borrowing cheaper and encouraging spending on credit and investment. Economic releases such as major economies, CPI data, non-farm payrolls, gross domestic product, retail sales, purchasing managers, index, and others can influence the value of a currency and create volatility. Politics, trade wars, elections, corruption scandals, and changes in policies can create political tensions which can influence the forex market. For example, Brexit and British or American elections have been major events in recent years which have affected both the political and financial spheres. Traders who are new to forex trading tend to choose liquid currency pairs like the euro against the USD or the USD against the JPY. They also spend a significant time on researching and learning the forex market and the currency pairs they are interested in by analyzing technical charts and monitoring economic data. Choosing the right forex trading strategy, cultivating discipline, and eliminating emotion are also important. Depending on your schedule and lifestyle, you can also choose the right time to trade, which will also determine your trading. You can choose from swing trading, day trading, or scalping. Whatever currency pair you choose, or what style you decide to follow, ensure you have a solid education and learn as much as you can about the market you want to trade. Thank you so much for watching us, guys. Bye-bye.
Good afternoon. How is everyone doing today? Hey Godson, how are you doing? If you can hear me okay, you can see me all right, put it into the chat, let me know. Just want to check and make sure that everything is working out properly. Hi Kala, yeah, me. Fantastic, thanks for that Godson. Hi Wisdom, how you're doing today? Today we are here with IronFX on a webinar series on the advanced fundamental analysis. So I hope you use some form of fundamental analysis with your trading. So this will be quite important. We'll give it a couple of minutes before we get started as everyone else streams in. And what I like to do as well is, as you are joining the session, put it into the chat. Let me know where you're joining me from. If you have any questions at any point in time, please feel free to put it into the chat. Let me know. Nigeria. How's it like in Nigeria this time of the year? Fantastic. Botswana. Places I haven't been to, but I would love to go visit someday. Nice. All right, we shall get started shortly. Just bear with me as we give it a minute more before we get going. Quite a number of things to get through today, so I'm quite, and I love looking at fundamentals. So it's really something that I would like to share with you all. Okay. Alrighty. Hang on. Let's get started. So again, welcome everyone to the IronFX webinar series. Today we are covering the advanced fundamental analysis, basically sharing with you how you could use some form of fundamental analysis together with your overall trading strategy. I do know that quite often when I mention fundamental analysis, a lot of traders kind of glaze over, they're not super interested. Why so is because most traders tend to like looking at the charts more. It's somewhat easier to just load up MT4 or load up a chart and look at the price movements and the candlesticks to try and determine where you should be entering or closing out your trade. But what I do like about fundamentals, and I'll try to convince you about fundamentals, is that it gives you the overall expected direction of where price could be heading, right? The overall expected direction of where price could be heading, just so that, if you're anticipating that price could be heading maybe towards the upside, or it could be going higher. And if the candlesticks and the charts are showing you that it's turning down, then I would, look to sit it out, wait for price to move in alignment with your fundamental analysis to help you get more confluence, right? You have more things. You don't just have the charts and the indicators or the price action showing you that price should be moving towards upside. You also have fundamentals telling you that it should be moving to an upside. Then, that way you get a lot more, a stronger move, possibly a more consistent move for your trade if you're looking to buy. All right. So that's how we would go about with fundamental analysis. That's how I use it as well. I'll tell you more about my trading strategy, but that's why I feel that, despite it being overlooked by a lot of traders, fundamental analysis is quite key to the overall trading, to any overall trading strategy. Okay. So before we get started, a quick disclaimer: the information in this webinar should not be considered as investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that as much as I'll be sharing with you how to, adopt fundamental analysis, possibly deploy it into your trading strategy in the longer term, what you should be doing first as we go through this session, two main things to do is, if you have any questions at any point in time, please feel free to put it into the chat. Let me know straight away. I'm watching the chat so I can answer your questions immediately. Don't wait till the end. And then also after this session, don't go trying to analyze it straight away and trying to trade based on fundamental analysis straight away. What I always suggest is, after a session, review the information, test it out, back test it, get a feel of how price moves according to or in alignment with the fundamental analysis. And then after you're testing it out, back testing it, then you would forward test it on a demo account, or just placing expectations on the charts, right? So looking at news events, drawing a line, showing where you expect price to go, seeing how price moves in alignment with your analysis or against it. Then you start tweaking your analysis. You can ask more questions. You can reach out to me to find out more. And then once you gain that confidence and the understanding and the confidence, then you would deploy it together with your current trading strategy, right? So it's not really something to replace your current strategy. I always feel that, fundamental analysis or any new parts or parts and parcels of trading that you learn should add on to your current strategy rather than to replace it. Okay, so with that said, quite a number of things to get through. Understanding the economic calendar, right? First of it is understanding economic calendar, news events to watch out for. There's a whole bunch. There's a lot of news events to watch. Or there's a whole bunch of news events that gets released every day, right? but there are only a few to really watch and pay attention to. You don't want to over focus on news events, on every particular news events, because that could end up with you getting too much information or just sitting there waiting for every news event to happen. And then you might just end up not trading, or we say paralysis by analysis, right? So too much information, not always a good thing. There are key news events to pay attention to. And then also understanding how these news events affect the market, whether you see price moving in alignment with based on the news events for the long term or short term, how long to expect price to continue on with the impact of the news. And then also looking at trading economic news events. I'll show you a couple of examples as well. All right. So far, so good. With that quick introduction of myself, my name is Jin Dao. You can all call me Jin. I have been trading for 10 to 15 years now already. The way I trade this is really up my alley, because the way I trade, I first look at fundamentals. I look at the news. I look at what has happened recently, what is coming up. And then based on those two, I develop a bias towards the currency, right? I'll be looking at the news and then determining, okay, this has happened, price should be going up or should be going down. Then looking at the news coming up, okay, if the news comes out this way, price would continue moving higher, or if it comes out the other way, we could see a big reversal towards the downside. So I use a combination of fundamentals first, and then after that, I'll apply the charts to it. All right, so I'll look at fundamentals, get the bias, but then I'll look at the charts to determine when to get into a trade. So I always say that fundamentals gives me the direction, charts give me the timing of when to get into a trade. And then based on the charts, I'll be looking at trend following scenarios. I do most of my trades as a trend following. I do use support resistance levels, some price action, some indicators as well. Okay, so first part, fundamental analysis. With that, let's look at understanding the economic calendar. Okay, there's a whole range of news to be released. Okay, I'll show you one more here first. Okay, so this is in August. We have yen monetary base numbers. We have the Aussie interest rate, or what they call the cash rate here. We have JOLTS job opening. That's the US jobs opening number, and also employment change numbers for New Zealand. So a whole bunch of news events, adding it all together. But what you want to know is that this is done on Forex Factory. You can look for it on Forex Factory, absolutely free to receive information. So I don't pay for any economic information. It's all free to join or free to get information here on Forex Factory. Let me just bring that up. Okay, so you can see it here on Forex Factory. Why is this news calendar or economic calendar so important? Is because it tells you exactly what time, right? It tells you exactly what time the news is happening. And that's very important, because before you enter a trade, or rather you don't want to enter a trade and then have a news event that's going to be released in the next couple of minutes. It looks like, it looks really bad, because if you enter a trade, a news event could change the direction of price. Okay, something could change and change the direction of price. So what we tend to do is look at the news events or look at the price and then see if there's any news events coming up. If there isn't, great, enter a trade. If there is, wait for the news event to happen, do an analysis again, and then look at the charts to determine whether to buy or sell, if it's changed your bias or not. Okay, so the timing of your news release is really important, right? Pay attention to the timing, at what time it happens. I do also have the habit of keeping my own personal trading schedule based on the times, right? You can see that if I bring this up, let me see, how do I do that? Okay, this is Forex Factory here. If you bring this up and I scroll through to next week or the week after, actually, you see that on Monday, 26, we all know what's happening there. It's a bank holiday, it's Christmas period. When I see events or when I see non-events like that, I would tend to pay less attention to the markets, right? Take a break, pay less attention to the markets, just because I know that New Zealand, Australia, the Swiss, the Euro, the pound, the UK, the Canadians, the US, they're all on holiday. Liquidity in the market is going to be low. Volatility is going to be low. It's really no point checking the charts, watching it, trying to find a trade, because you know that pretty much everyone else around the world is not trading. So that's how I would plan my own trading day as well. You know, not just looking at the news events that could happen. I'm looking to see when there are no news events, when market is likely to be quiet with no significant price movements. Okay, so with that, coming back to the, where is it? Let me see. This one. Okay. That was the timing of the news. You can get it on Forex Factory. Let me put it into the chat here for you guys. All right. You can use that to get your news events. Good thing about using such an economic calendar as well is that you not only get the timing of the news, you also get the news event itself, the name of news events. You get the analysis. You see what was the previous data. You see what they expect, right? So the previous and the forecast. And then when the time comes around, the actual data gets released. So you can see here, it's not filled in because the time hasn't reached yet. It was 7:46. You will be waiting for the 8 a.m. news to happen. So the news events or the data for the news will get released as it happens down on the actual here. Okay, so you would be trading actual against the forecast against the previous, right? AFP. So, you know, if you have your actual being greater than your forecast and previous, very good, strong number, you expect the currency to strengthen. If your actual is less than your forecast, then I would say you would be expecting price to weaken. Okay, so that one screen, this one screen here on Forex Factory showing you your news, super crucial and important. It tells you the timing. It tells you the news event itself. Okay, it tells you the previous, the forecasted, and the actual data to be released. All right, so this is the first screen or the first site that I have opened every day before I get started with my trades. So you can see here, we got a whole bunch of news, 10-year bonds on Japan, 10-year bonds, building approvals, monetary base, consumer climate, manufacturing PMI, jobs openings, GDT price index, right? All that put together, it becomes quite confusing. All right, Kalayame, I saw your question. I'll get to that. Just let me get back to that. Okay, so it can get quite confusing. What you want to do is consider how all these news events come together, which ones are going to be more important. And that's where we have this slide here, right? Household events, household news. So this is a range of economic data. You have household news. What we get in household news are employment numbers, right? Employment numbers, consumer spending. We have the job numbers, we have consumer sentiment. All that retail sales data is household. Business would be the PMI numbers, purchasing managers index numbers. All right, and then banks will be the expectations of banks, how they expect prices to be, or interest rates to be moving, the overall economic performance of the country. The government will be the GDP. Let me see if I can do this. No, I can't. Okay, so government will be GDP. So I'll show you here. This is PMI. This is GDP. Okay, and then central banks will be interest rates and also inflation. Okay, so you pay attention to interest rates and inflation data on the central banks. The government will pay attention to the GDP numbers. Business will be the PMI numbers to be released. PMI, we have services, we have manufacturing, right? We have services and manufacturing. Household, we have employment, we have spending as an overall. Okay, and what you see here is that there are a lot, based on the dots here, there are a lot of news information on household data, right? Consumer or employment numbers are released weekly for the US, weekly and monthly for the US. We have the consumer spending numbers on a weekly basis. We have a lot of data being released for households. For businesses, it's just one news event, the PMI, the services PMI, the manufacturing PMI. So you have a bit less, right? So you have a bit less information there. Banks, you're looking at the economic projection, right? So again, less info there. Government, even less so, it's just a couple. And then central banks, you have inflation, interest rates, decisions. Okay, so even less so again. Now, let me ask you that. With more news events here all the way down to the least news events, which do you think is going to be more important? The household data, is this going to be more important, or is the central bank data going to be more important? Based on, you know, the number of news events being very high on a household and news events being very low in central bank, you got it. Great job. Good stuff, y'all. Right? So yes, central bank is going to be the most important, although there are less news events. They're more important. They have a bigger impact. They have a bigger impact on the overall economy, and also it applies whatever changes here, whatever changes in this block applies all the way back down again, right? If they're increasing interest rates, then we could see GDP drop, right? If they're increasing interest rates, we could see consumer spending drop as well. So there are, or inflation numbers climbing high, we can see that PMI numbers or economic projection levels might be heading down. So there are bigger impact on central bank data compared to household. All right. So coming back to the timing of the news release and the economic calendar here, when we look at the AFP, so the question there was, you know, about the AFP. What it is A being the actual data being released, F being the forecasted, and P being the previous. So if actual is greater than your forecast and greater than your previous, then you're likely to see price climbing towards the upside, right? How I look at this, or simple way that I would look at this, is that if, say, for example, last month you received $100, okay, and you expect to receive this month $110, but what you actually got was $150. In this case, your actual will be greater than your forecast and your previous. You'll be super happy, you know, and sentiment will be pushing towards upside, hawkish, bullish sentiment, price moving higher. On the flip side, if you had your A being smaller than your F and smaller than your P, then naturally we would say that price will be heading down, because if we flip this around, you get 100, you're expecting 110, but you only got 99, right? Then you'd be negative, you'll be dovish, you see price pushing towards the downside. Now, let's say on the other last scenario that if your actual is greater than your forecast, but smaller than your previous, what do you think was going to happen there? So just think about it. You know, if you had $100, you're expecting 110, but you got a well, how does that work? That doesn't work. Let's say you got $150. You had 150. You're expecting 110, but you actually got 120. Right? So it's actual was greater than your forecast, but smaller than your previous. What do you think is going to happen here? Will the arrow be pointing towards upside, or will it be pointing towards the downside? What do you think? Upside or downside? Actual, greater than forecast, but less than previous. Good stuff, right? So you will still be looking at price possibly pushing higher. Why so is because you're already expecting 110, but you got more than you expected. Okay. But to preface that, or to put a little bit of a condition to that, it really depends on what happens before, what was happening before. If you always had been at 150 and then now you're at 120, then maybe it would only go up a little bit before turning back down again. So it also determines on what the previous trend was. Okay. Camila, does that answer your Kala Maye? Does that answer your question there about the AFP? Fantastic. Good stuff. All right. So there are also, right? So why a lot of people get confused about prices, they get confused about how things move, right? So just give me a second here. Okay. How prices move and which news to pay attention to. It's going to be quite important to pay attention to on the theme of the economic focus. Okay, it's important to pay attention to the theme of economic focus because it's not always the same news. It's not always the same news that you want to pay attention to. In different years, different times, there are different news to pay attention to. Okay, so you can't see it here. This is news events. I don't know why the color messed up. Okay, this is period. And this is the focus. Okay, so you're going to pay attention to different news events at different times. In 2008, 2009, we had a global financial crisis. 2008, 2009, we had a global financial crisis. At that point, you know, banks were going bankrupt. We had a lot of people losing money. Big corporations were losing money. People were being fired, losing jobs. So the focus then was about employment data and wage growth, right? Employment data and wage growth. A lot of all the other news didn't have too much of a price impact during that period. Markets and traders, analysts will focus on how quickly will people getting back into work and whether they're getting paid the same amount or whether they're getting paid less than before. All right, so that's important there. And then most recently, we all know in 2020, 2021, we had the COVID pandemic. Right, we had COVID pandemic. What happened at that time? We saw gross domestic product. This is GDP. All right, gross domestic product dropping significantly because as the pandemic was happening, economies were getting closed. Everything was shut down. No one was traveling. No one was spending. GDP dropped. Right, GDP dropped significantly. The focus then during those 2 years was GDP going to turn back up? How quickly can it recover? Okay. And now most recently in 2020, It's all the worry about the recession. It's all the worry about the recession. Is it with inflation being sky high, with interest rates now slowly climbing back up, right? Are we heading into a recession? Not just the US, but globally, right? Because pretty much all economies are facing sky high inflation and increasing interest rates. We're seeing a slowdown in economic activity. All of that leads to the risk of a recession. So when it comes down to now in this period, the focus is down to recession, the worries of recession. All the news that I'm paying attention to is about inflation and interest rates. I'm not so concerned about the employment numbers anymore. I'm not so concerned about the GDP numbers. It's all about the inflation and the interest rates. All right. So that gives you a little bit of a snapshot view of the themes. It always changes. You can't just be looking at one set of news and expect to trade based on that or to apply it right across or your journey through your trading, right? Through your trading journey. It always changes based on the theme of the markets, based on what's happening in the world. So there are some key news events to pay attention to watch out for. In general, then you will filter it down as situations happen and develop. Okay. So like we we're just talking about inflation data, right? Inflation data, it gets released as CPI. Just this week alone, we've got a whole bunch of CPI data being released, and we've seen huge price movements based on that CPI data, right? So you have core CPI, you have terrible writing, pardon me, core CPI, you have CPI month on month, and you'd have CPI quarter on quarter, and then finally CPI year on year. Okay, so you want to pay attention. Look at that. What do you think? Which is going to be more important, month on month, quarter on quarter, or year on year? Which is going to be more important CPI data to pay attention to? Which is going to move prices more significantly? Which CPI data? Year on year, you got it. You guys are fantastic, doing a great job, right? So the year-on-year data definitely would move prices more significantly. Why so? Because it considers a longer period, right? It considers a longer period. It's comparing last year's CPI at that point in time to this year's CPI at the same point in time. So that gives you a longer view, a general view of how inflation growth is going, right? The good thing is that quite often the year-on-year CPI data is being released at almost at the same time as the month-on-month data. Okay, so sometimes people tend to overlook the month-on-month just to focus on the year-on-year. What is the CPI? What's the CPI, the inflation data? Basically, inflation is the measure of change in price level of a basket of goods and services, right? A basket of goods and services. It indicates the change in a cost of living. The target CPI is at 2 to 3%. The target CPI is at 2 to 3%. I can tell you now that the US CPI is at 7.1%, right? The UK data, UK CPI, if I'm not wrong, let me just check that. You can see it just got released today, Wednesday 14th, 3 p.m. GMT plus 8 just got released at 10.7, right? 10.7 was a 11.1, expected 10.9, came out at 10.7. The US CPI just yesterday, where was it? Just give me a moment, I'll find it for you guys. US CPI, you can see here, just yesterday was 7.7, expected 7.3, was released at 7.1. Okay, so you can see the news events happening this week. So CPI data for the UK right now at 10.7. All right, and what you should notice quite quickly is that the US and the UK CPI is at 7.1 and 10.7 compared to their target of 2 to 3%. So it's multiples above the target level. It's multiples above the target level, which is why we're seeing the central banks increasing interest rates just to try and bring down CPI. So you see that as interest rates increases, typically we should see inflation drop, right? Typically we should see inflation drop. That's the relationship there. Is it researchers and analysts that released the expected results? Okay, so I'll come back to that. So I think what you're meaning is that well, it's not the expected result. Okay, so the results here are being released by the government. So the 10.7 is being released by the Office of National Statistics. So from the UK government on 10.7. So the previous would be what they had last month or last period. The forecast is actually collated from a benchmark of analysts, researchers and analysts. They collect all their expectations, collect all their data, put it together, average it out, and then that's where you get the forecast number. Okay, so can you trust the forecast number? To some extent. You wouldn't say that they're always going to be right. And in fact, I can almost guarantee you that forecast numbers are most often wrong, but it's only how far off they are. All right, so at 11.1, in this case, how I looked at it this afternoon when I was trading, at 11.1, expected 10.9. So I would look at it as, hey, there's an expectation that inflation will slow down. Inflation growth will slow down, and it did slow down. It dropped to 10.7. So it didn't come as a big surprise in this case. I can see that it's slowly moving towards, very slowly moving towards its target of that 2 to 3%. Okay, makes sense. Hope I answered your question there, Godson. All right, fantastic. So with that, after inflation data, like I was just telling you here, as interest rates increase, we expect inflation to drop. So interest rates decisions comes from the central banks, right? Central banks release their interest rate decision whether to hike rates or to drop rates. We do have a big series of interest rates decision to be released tomorrow, right? Tomorrow. So there's going to be I believe there's going to be huge volatility in the markets for tomorrow. So watch out for that. Central banks hike interest rates to increase the cost of borrowing, right? So imagine now that US interest rates is at 4%. If they look at it, and they might be increasing it to 4.5%. Right now, if you're looking to buy anything suddenly and on a loan in terms of borrowing, then the repayments have gone up from 4% to 4.5%. So it increases the cost of borrowing. And because it increases the cost of borrowing, what happens is that people spend less, right? People spend less, or companies borrow less and spend less. It's better to put your money into the bank and receive a 4% return or 4.5% return compared to trying to trade and trying to make that 4 to 5% returns. So what happens is, as interest rate increases, it slows down on economic activity. It slows down on economic activity. And because of that slowdown, it also slows down the speed of inflation growth, right? It slows down the speed of inflation growth. And that's why it comes back to, as interest rates increases, we're going to see inflation drop. Okay, so right now, as we see inflation in the US 7.1, UK 10.7, still a distance away from the 2 to 3%. What we're going to expect in this case is further interest rate increases to come from the central banks, right? Further interest rate decision or interest rate hikes to come from the central bank. As we look, right, as we talk about here, a slowdown in economic activity. How do we know a slowdown in economic activity happens is when we look at the GDP data. When we look at the GDP data, because GDP measures the total value of goods and services produced in an economy, in a country, right? So, so when we look at, possible interest rates hike, right, slowing down economic activity, we see less people or less production, right? Less investments into machineries, less investments into technology, people saving money, spending less. That leads to a drop or slowdown in the GDP because goods and services, or rather goods, get slowed down. Goods production gets slowed down. And then overall economic activity of the country slows down. Okay. What do we mean by overall economic activity of the country? We could talk about employment numbers, right? Employment numbers would slow down because companies are not spending as much, they're not building as much, they're not selling as much. So they're going to slow down on employing people. And also spending would slow down, right? Spending would slow down because the less you work, the less money you have, the less you're going to spend. It's going to come down to spending only what you need, not so much on splurging. Okay, so consumer spending is going to drop as well. So that all puts together into a slowdown of the overall economic activity in the country. Make sense so far, everyone? I mean, we've gone through quite a number of points here. Make sense? All good? Okay, good. So how do these key news events affect the market? Right? How do these events affect the market? There, we will split it up in between short-term and long to medium-term effects. So what I mean by short-term effects is that it all depends on the existing trend or the pre-trend, right? Say, for example, employment change numbers, retail sales number, purchasing managers index. These will have short-term impact on price. What I mean by that is that, let's say, for example, price has been trending towards the downside. At this point, right? At this point, employment change numbers might be strong. We might see, an increase in employment numbers. What we could see, or what will most likely happen, is we'll see price push towards upside briefly because of the news, because of the good positive employment change number. But then because of the previous trend towards the downside, what we're more likely to see is that it will continue back down again. Similar to retail sales number, you can say push up, turn back down, PMI as well. It's going to push up before turning back down again. However, if, let's say, your pre-existing trend was towards the downside, and we have employment change numbers, in this case, not a good number, right? In fact, it's bad. Let's say it's a bad, more people are losing their jobs. What we're going to have is, as it drops, we're going to see that drop down, or not backwards. Let me just do that again. All right, we're going to see as price drops, we're going to see the news come out, bad news. We're going to see price drop downwards before continuing on again. Okay, So it all depends on how your not just the news, but also on the previous trend. Okay, so it's not just employment, retail, or PMI, but also the existing trend. With that said, it's actually more interesting, or you're going to see a bigger trading opportunity when you look at medium to longer term effects, right? Medium to longer term effects, which has the potential, this is very important, potential to change or reverse on trend, right? Change or reverse on trend. This, I'll give you the example of this later as a live chart. But in general, gross domestic product, inflation data, interest rate decision, what happens is that you could see price maybe climbing towards upside. And then let's say that they have decided to increase interest rates, and then we're going to see price drop back down. Okay, so we're going to see this could lead to a change or reverse in price. And this drop could happen over the medium to longer term. Okay, so more accurate depiction of this will be, oops. You see price moving to our upside on release of the news, you're going to see price drop, right? And then after that, continue to trend downwards again. Okay, so it's all, these are the three main news events that could cause prices to change or reverse their trend. Okay, I want to show you this inflation data that we just had. So you see here yesterday, we had the US CPI data, 7.7, expected 7.3, came out at 7.1, right? 7.7, 7.3, 7.1. In this case, although it is a red number, which should signify bad news, is actually relatively good, but just that as inflation drops, we're going to see possibly smaller scale interest rate increases for the US. Okay, so a little bit of weakness expected as that released on the US CPI data. We're expecting the US dollar to weaken. So with that, you can see here, right? I'll clear out these charts for now. You see here, this was the euro dollar, right? From the 1st of December, has been pushing towards the upside. We saw it trading higher because of that dollar weakness, right? We saw it pushing higher because of that dollar weakness. And then what happened at this point? This was when the news got released. You can see it was released at 9:30 p.m. GMT plus 8. And then it happened here at 9 p.m., right? Because of that dollar weakness, we actually saw the euro dollar go from this 1.0540, we could even say 1.0540 level, shooting upwards within the hour, right? Within the hour, oops. No. Within the hour, it actually went up by how much? That 121 pips, right? It went up by 121 pips within the hour just because of that data release being CPI weaker than expected, weaker than previous. So we're going to see that weaker US dollar. Right, so that was the euro dollar pushing towards the upside because of the weaker dollar. You can see here as well, this is the dollar index. You can see that it was ranging right across. So this is how it can change a potential move, right? A direction. It was ranging right across. On release of the news, it broke lower from this 105 level straight down towards this 103.60 level. Right? It went straight down towards 103.60, consolidated before testing the support level again. So quite important there. One more example I'll show you as well is the US yen. Let me just clear that out. This one you can see it's a complete reversal All right, so remember we were talking about how it's potential to change or to reverse trend. You can see here that the US yen on the H1 time frame had been trading higher, right? We see let me just change this a little bit for you guys. Right, we can see that there was a low here, and then it's from a higher low. It's been pushing towards the upside on release of the news at this point, right? Because of that dollar weakness, we actually saw it turn down from this 137.30 level, broke strongly down to reach 134.70, well, 134.66. Bounced, retrace, and then possibly trading lower again. Okay, so this is really that snapshot view of how news could impact on your prices, could reverse trend based on which news you pay attention to. But bear in mind, it also depends on the previous trend, right? The previous trend. If you talk about big news events, it could reverse the previous trend. But what I also say is that if you're looking to test this out or to deploy this into your trading strategy, don't forget to also consider your support and resistance levels, right? Why we saw the US yen come down and test this level. We know we have a key support level there at 133.75. We know that there was also another level there, bit of a consolidation level there. I mean, a refraction level there. And that's why we saw the US yen drop to that support of 135 before consolidating, bouncing back up, and then now looking to trade lower again. Okay, so anticipation here is that we could see the US yen trade lower towards the downside, towards the 133.75 support level, because of that new downward trend, given the CPI data release. Okay. What I'll do next is also just to pre-warn you about what could be happening. You see here at 3 a.m. GMT plus 8. So I have a couple of new people who have just joined us. Just convert this to your timing. 3 a.m. GMT plus 8. We do have the US interest rate decision looking to go from a 4 to a 4.5%. So a rate hike expected for the US from 4 to a 4.5. Watch out for that. We could see the US dollar strengthen, right? Weaken first, and then after that strengthen or fluctuate around in high volatility. And then at 4:30, we do have the Swiss National Bank with the interest rate decision, 0.5 to a 1%. Again, another 50 basis point rate hike expected. 8 p.m. tomorrow, GMT plus 8, Bank of England for the UK expected to increase interest rates from 3 to 3.5. And then lastly at 9:15, we're looking at the ECB, the European Central Bank, looking to take interest rates higher again from a 2% to a 2.5%, another 50 basis point rate hike. So you see that tomorrow, if you're looking to trade, tomorrow, just be super aware that there are a lot of big news events we're very likely to see price spike up, spike down, high volatility situations, because we have the euro with the big news, we have the pound with the big news, the Swiss franc with the big news, and most of all, the US dollar early tomorrow morning at 3 a.m. GMT plus 8 with the interest rate decision as well. Okay, so a lot of central bank news for tomorrow. We're going to see, might be, if you're comfortable scalping the market, there might be very good trading opportunities. But if you're not comfortable with it, then intraday opportunities, I think that if you're looking at longer term trades, you might want to, size it down, so that you can move your stop loss a little bit further away, because I think volatility is going to be high. So you don't want to get fluctuated out of your trading position. Okay. So with that said, as we come to the end of the session, is there any further questions? If there are no further questions, also I would like to ask is, now that we've got the snapshot view of how fundamental analysis can add on to your trading strategy, would this be something that you'll be looking to, test it out and to deploy into your own trading? What's my general advice to beginners to FX? I would say start small, be quick to learn, but test it out, try it out. Don't give up. It's a long-term trade, it's long-term journey. So test it out. Find a strategy, or have a strategy that fits to you, not a strategy that you think is going to work, because sometimes good strategies you might not like or might not use because you're not comfortable with it. So find a strategy that fits your own characteristics, your own trading characteristics. Don't give up. It's a long-term game. And lastly, make sure you manage your risk. Okay, I can tell you that in trading FX is not hard to make money, but if you don't manage your risk, it's going to be really hard to try and keep your money. Okay, so make sure risk management is number one, crucial to any beginner or intermediate or expert in FX trading. Don't you have a personal space where we can chat with us? You can reach out. I think that there is the chat room there. I think you ask IronFX about the chat room. You can find out more about joining the chat rooms. Alrighty. So with that said, hope you remember, please trade well, trade safe, big news events coming out. With that, take care now, and I'll see you again. Bye-bye now.